Supermicro has been a very turbulent stock to say the least in 2024. With it soaring at the start of 2024 and then it started to collapse, especially after it came out that its financial statements could have been manipulated. Furthermore, the company then delayed releasing its quarterly earnings report due to it potentially being incorrect. Despite this, revenue is soaring, profits are soaring, and it is actually a partner with Nvidia. So this company has had a bit of a bipolar year, with them having high revenue yet poor financial decisions along the way, leading to a very turbulent stock. Is this definitely a stock to be looking at buying in 2025? In this video, we're going to be trying to find out exactly that. We're looking at the financial data, looking at the news, and we're going to be seeing whether or not this stock is undervalued and if it is a good stock to be buying this year for your investment. So what does this company actually do? A Supermicro company designs, manufactures and sells high-performance server software and related products. They are also known for creating enterprise-grade scalable computing solutions primarily used in data centers, cloud computing and other demanding IT environments. They offer a range of products including server systems, motherboards, storage solutions, networking products, power supplies and workstations. This company is recognized for delivering highly customizable systems, allowing clients to configure hardware to meet specific performance requirements. Their solutions are commonly used by businesses in industries such as cloud computing, telecommunications, enterprise IT, and high-performance computing. So predicting exactly what will lead to a successful 2025 for this company, considering a large amount of factors such as continued demand for the data centers and cloud computer, adoption of new technologies such as 5G edge computing, sustainability and energy efficiency, competition, as they do have competition in the likes of Dell and Hellwit Packaging Enterprise. The supply chain and global manufacturing systems for this company. Where the global semiconductor supply chain disruptions of the last few years have affected many hardware companies, while these issues are expected to stabilize, any renewed disruptions in supply chains could definitely disrupt the stock price for this company. What is the outlook for 2025? Supermicro is well positioned to perform positively through 2025 with solid prospects for growth driven by several key factors. One of these being increasing demand for cloud computing, AI and HPC infrastructure. The second being technological innovation in AI, edge computing and energy efficient solutions. A strong reputation for customization and reliability in mission critical environments, and a growing focus on sustainability and reducing data center energy consumption. Despite this, they will need to keep adapting to competitive pressures, supply chain risks, and geopolitical challenges if they want to stay ahead of the technological curve, particularly with AI and energy efficient innovations. Supermicro could definitely see sustained growth and continue its role as a leader in the enterprise of AI and cloud computing technologies. So I'm now going to put their data into my system to help us see whether or not this is a buy or sell this year and hopefully see some good returns within this stock. So we're going to kickstart this off with a liquidity ratio. This will allow us to see how much liquid cash they have towards their debt. And it is obviously very important to bear in mind that looking at these next three charts are going to be quite subjective, especially due to the fact that they have been known for almost manipulating these figures, and it is very hard to actually get this data as they don't actually have it listed on Yahoo Finance properly. These are mostly from 2023. Some of them are from 24. I think the top two quarters or top one are from 2024. So these are just a very basic baseline to go off, so I won't go on for these for too long. But the liquidity looks really good with them being well above the ratio of 1 in which they are obviously wanting to have. Looking at the retention, we can see a very similar story there. Retention as of the last known quarter was 10%, which is what you want. Ideally, we would want to see this around the 15%. However, there is signs that this is starting to increase. And one bearish indicator for this company is their free cash flow. This is not looking particularly good, with it decreasing pretty much year on year. Quarter on quarter, sorry. It's not looking particularly good. But I don't want to talk about this for too long, obviously. So now we're going to move on to the 365-day exponential charts. So looking at the 365-day charts here, we can see that the trend lines are obviously predicting a decrease. We are seeing a bit of a bowing action in this trend line, and we are seeing the volume decreasing as well. I do think that 2025 we're going to see a reversal, of course, I don't know how late into 2025 we're going to see that. We'll get on to why I think this is going to happen just in a bit later when we look at the intrinsic value. But for now, let's look at the 91-day moving averages to see if there's a difference. So looking here on the 91-day moving averages, we can see it is pretty much the exact same story. We are slightly above the trend line right now. This could be a bullish indicator. However, I don't think there is any good reason for this currently. And again, very similar story. Looking at the quick figures for this company, we've got a PE ratio of 16.76, which is very good. A 52-week high of 122, a low of 17, this being a massive difference of 105, with the current price being set at 33 and the beta being at 1.31. Now, this is where it gets interesting. This is why I think this stock could be a very big buy for this year coming. Looking at Graham's formula, on the left we have the original, which can be seen as a bullish indicator, and the right a revised, more bearish indicator. Both of these are putting this stock at a buy. On the left, we see an intrinsic value of $142 per share, and on the right, we see $76, which are both massively above where we currently are at $33.33, with a margin on safety of both of these systems at 75%. We see on the left an acceptable buy price of $106, and on the right, a $57 acceptable buy price. So we could see returns of up to 80% in this stock in 2025. This is all very subjective, of course, as this stock is very volatile, but it is one that does have high potential for sure. And again, a very bearish formula pushing this stock upwards is Peter Lynch's value, where we get a result of 1.9, which means this stock is undervalued. So again, this is a very bearish formula. For this stock to be saying that this stock is currently undervalued is quite remarkable. So I do think this will be a good stock going forth into 2025. But let's see what the trading view chart is actually saying currently with progression in this stock. So currently we are definitely in a short market. However, this looks like it could actually reverse relatively soon. How soon, I'm not entirely sure. I will be trying to keep an update on this weekly. If you do want to subscribe to see that, please do hit the button down below. But again, we are currently at that support. We've just actually bounced off of it in the last day trading. With articles such as Super Micro stock has stopped being volatile, what that means for this stock. Supermicro Computer Incorporated stock was rising modestly early Friday, attempting to bounce back after 5 days of consecutive losses. Shares of the artificial intelligence server maker were by far the most volatile out of the S&P 500 companies in 2024, but have in the past few days moved fairly steadily lower. So this could definitely be a very low point for this company. Will we start to see a bounce up from here? It is quite likely. Obviously, this isn't the most recent low, as in November we had a very short low here. But again, we could potentially seeing the same thing. I don't entirely know, as this is a very volatile stock, but there is indicators to say that the volatility could potentially be starting to slow down now. And with the intrinsic value being so much higher than where we currently are, there is potential for this stock to massively grow in 2025. We are, however, massively below the moving averages at the moment. So if you were to long this position, I would try and wait for the 200 moving average to actually fall below where we currently are, or at least get close to it, because right now we are massively below it. But again, it's hard to say with the stock being it is just so volatile. But I do think we are starting to see the end of that again. With analysts placing this stock at a hold currently, this is based off of 11 analysts. I would say at the moment I would definitely agree. Maybe at a later date this is definitely a good stock to buy. Right now, potentially not. Personally, I think I would be putting this more towards the buy. It's definitely not a sell in my opinion, as the intrinsic value is just massively higher. But if you are in this stock for a very, very long time, I will be positioning this stock at a buy. But I do think you could potentially time the market a bit better. The price target being set at the high end of $90 and the low of $30 over the course of 2025. There is still a lot of volatility projected into this stock. But again, I do think the volatility could potentially now be over. It all depends on what we see in the next earnings report. If this company does fail to give a solid earnings report and seems to be fabricating again, this stock is just, it might be over for this stock. But I don't think they will actually mess it up this time, as it is all riding on that, and there will be a lot of pressure to deliver. So that concludes my analysis for this stock going into this new year. I do think it is a strong buy, and I will be looking to buy into this position. If you want to know what are the stocks you should be buying this year, click on the playlist down below or wherever it is. It will go into my analysis for January stocks. Again, I would like to say I'm not a financial advisor. This is just my own opinions on what I have seen through the market. If you have found this useful or did in fact enjoy this video, please do consider liking and subscribing. It would be greatly appreciated. With that all being said, I will see you for the next video.